Welcome to Passport to Wealth. I'm your host, Arielle Tucker, certified financial planner and fellow U.S. expat. On this show, we bring together cross-border experts and global Americans to help you make confident decisions about your life, your money, and your next move abroad. Let's get started. Welcome back to Passport to Wealth. My name is Arielle Tucker. I'm an EA and CFP, and today I am joined with Alex McGowin, who is a CPA and an international tax expert with deep experience advising U.S. expats, non-residents, and Americans investing abroad. Alex, like me, began his career at PwC, though different offices. You were in Houston. I was in Zurich. And then you also did a lot of cross-border work at Grant Thornton. And now you have your own firm, McGowin Tax LLC, where you help clients navigate U.S. tax compliance, foreign investment structures, and real estate purchases throughout Central and South America, including countries like Costa Rica, where you're currently sitting, and Panama as well. So I'm really excited to talk to you because you do a bunch of stuff that I do not do at all. So I can't wait to learn from you today. And I think it's really cool to just mention that you used to actually teach at the University of Mobile. Sorry about that. And so you are an educator first. And I think I always love finding those cross-border professionals who are educators first. So we've got a lot to talk about today, a lot to learn about buying property abroad and some of those common traps and pitfalls. So we'll just get right into it today, Alex.
Yeah, let's do it. Sounds good.
Okay, awesome. So tell me a little bit more about your, how did you become a specialist in international taxation and especially highlighting your kind of experience in foreign real estate structures? That sounds so intimidating, by the way, foreign real estate structures. Tell me, what does that even mean?
Yeah, I'll give you the relatively short version. I did a master's in tax in Alabama, and I just kind of liked the international course that I took. And then I got a job with PwC, and they were like, you can choose what group you want to be in. I was like, I have no idea what group I want to be in. And then I saw there was a group called the International Assignment Services, which isn't even called that anymore. But that was like the expat group. I was like, this sounds pretty cool. I really had no specific reason for liking it. So I went into that group. So we did expat work and things like that. And then I really enjoyed the international stuff and stuck with it. Then I went to Grant Thornton and did the international thing more at a corporate scale. But I guess what I kind of found is I always wanted to have my own firm. That was really the goal from the beginning. And I was just kind of trying to get the experiences I needed to feel competent enough to do it, but I kind of see what I do as like the chicken salad chick of tax preparing or tax work, just because like it's so hard to know everything, right? And so I just said, I'm not that smart at the end of the day. I just figured, all right, I'm going to take this international tax thing and I'm just going to do that and get good at that, And so that's what I did. And over time, like what I'm trying to do now is really narrow it down even more to like geographically working with, I'm working with a lot of people in Latin America now, like you said, but yeah, and specifically that includes the real estate side. So what that means, just like a lot of the work that I'm doing on the real estate side is U.S. people moving to Latin America. So like you said, I'm in Costa Rica right now. I have a lot of clients in Guanacaste, which is like the Pacific beach part of Costa Rica, but people all over this country. They just invest in rental real estate here as a second home, or they move down here and purchase real estate. And what I found is there's just a lot of gotchas and things that really aren't that tricky. Like some of the gotcha pieces really aren't that tricky. It's just people don't know them. And then there's other things we can do. The next step is trying to find ways to save taxes and do things correctly. But yeah, that's a little bit of the background of how I got here, I guess.
I think that's so, I tell my clients this all the time. I always say, we work with really smart people, right? And you're really good at what you do. And you do that all day, every day. And I just happen to do this one little thing all day, every day. Think about it, read about it, write about it. So I'm really good at this. And when I look for experts that we refer out to, I look for those truly specialized experts who are specialized in a certain tax law, maybe certain countries within tax law. Because even when we're talking about just like taxes, right? We've got corporate taxes and personal taxes. And then we talk about cross-border or international taxation, right? That is like a tiny sliver of taxes. And then you layer on country-specific consideration. There's a lot of ways to niche down. And I think you summarized it so perfectly. Like there are so many gotchas like in the international tax space, where when you're going onto ChatGPT or you're reading forums or you're thinking about buying the real estate abroad, you don't even know the questions to ask, right? You
Right.
could be asking really good questions and completely missing, the elephant in the room, right? So to speak.
I mean, my goal is to provide as much value as I can to my clients, right? And the more I can specialize in what I'm doing, the more value I can add. That's what I feel like. And right when I started, I'm in a fortunate position now to where I have been able to narrow things down just from a client perspective. But of course, like right when I started my firm in like 2019, I really had to take everything that was international related. Because I mean, of course, I have clients all over the world. I don't just do things in Costa Rica
Hmm.
because I can do US tax preparation for international things. I mean, the US tax law is the same, but when I have clients in Mexico or Costa Rica or Panama, I understand those laws better. Not that I like do Costa Rican taxes, but I know the process and I can put you in touch with people to get residency in these countries, to, talk to people about importing your vehicles to these countries or real estate agents and things like that. So, like you said, and you do the same thing in Switzerland. We've talked before about like the work you do. I mean, you kind of try to focus on your area because you understand the processes and can put people in touch with the right people, I think. And so it's the same thing for me here. Like, I feel like I can provide more value to clients the more I can like focus in on what I'm doing. That's the goal at the end of
Well, I completely agree. And I think what I've realized in this space, and you've also realized this, is your networks that you build are so valuable. So that when the client comes to you, calls you, and they're moving there, they've got their vehicle to import, they're looking for certain types of properties, whatever, you have the Rolodex of people that you've already vetted, that you already are working with, are good and are going to provide a great service, even if they don't do exactly what you're doing, right? And so
yeah.
I see so much value because it's just like shortcuts. And when
Yeah, yeah.
you have, you don't have a lot of time, shortcuts are awesome to just get to the right people and not get scammed. Because unfortunately, what I'm seeing right now is all these kind of pop-up scams in the cross-border space because they're seeing, oh, wow, 30% of Americans are looking to move abroad. How
Yeah.
can we sell them a product that they don't need or a service that they don't need or want, but they don't even know what they're asking for. And
Right.
we're
They're
just
good
really
at getting you in the door,
exactly.
but
Yep.
then that's where the service ends, or at
Yeah.
least an in-depth
Yes.
sort of. Yeah. And I
Yep.
mean, like for example, I have clients in Hungary that have the same thing, but like I don't know anybody in Hungary. So like I can
Hmm.
do your US tax return, but that's kind of where my service ends there. Whereas as I focus more on specific places and specific types of transactions, I can provide more value. One of those is real estate, where I help people structure the real estate transactions and comply. And the other one is more business. I mean, I'd say the two things I'm focusing on are real estate transactions with people and U.S. people with international businesses. So that's either an expat with a U.S. business or a foreign business, or somebody in the U.S. with foreign subsidiaries, generally in Latin America as well. It kind of ties into the real estate because it involves foreign business structuring, which is where the pieces comes in, which is different in Latin America than in Europe. And I can explain why,
Yeah.
but
Can you? Because I'm like, tell me more.
I mean,
When do people come to you? Are they coming to you to file the first tax return? Hey, I now own this property in Costa Rica or Latin America. Or are they coming to you? They know to come to you and they're saying, I'm thinking about buying this property. What are the next steps? When are you engaging with them?
yeah. So I think that's where Costa Rica has been a little different than how I engaged with my other clients, in that, the clients I have that are in the UK or France or something, and I'm going to stereotype here, but it is what it is. I feel like a lot of times they're a little bit more sophisticated investors. Like if there's somebody going to the UK or somewhere like that, there's other professionals there and there's other people there that are telling them about US taxes. In my experience, the people investing or moving in Panama or Costa Rica, it's usually just some guy from Minnesota, that he's been working his whole life and he has savings built up and he's been vacationing in Costa Rica for a decade and he wants to buy a house down there. And he's been working with his local tax professional his whole life. They don't know what they don't know, And so
Hmm.
usually people are getting to me. I know a lot of attorneys and real estate agents in Costa Rica. And so they connect me through there. So in Costa Rica, it makes sense to set up their version of an LLC, which is the SRL. And so that's where the wheels start to fall off if they don't talk to someone like me, is because they set up the LLC And all of a sudden they have a controlled foreign corporation. They've never had something like that. Their tax preparer in the US has no idea what to do about that. And then they're personally using a house that's in a controlled foreign corporation that causes problems. They sell it later and they're triggering subpart F that they don't know about. So it causes a lot of problems, which is very simply avoided with a check the box selection. That's really, but I mean, generally how I do it when I talk to my clients is I kind of phase it out. The first thing is we want to make sure you're filing the right tax forms on time so that we don't have stupid penalties. That's like step one of tax planning. And then step two is how do we actually structure this in a way that doesn't get you worse off from a tax perspective? And then step three is how do we make it better? And usually like step one is where people mess up, which is not filing the right forms on time, But that's how they're getting to me usually is just like they see, like I have a YouTube channel where I talk about a lot of this stuff and people find me through there, but otherwise it's local contacts that people ask the right questions or sometimes they're like 10 years into a property and we have to figure out how to unwind things, which is a little more problematic. But yeah.
Great YouTube channel, by the way, super educational. And so we'll be sure to link that as well as a great resource for anyone who's looking to learn more about property ownership and real estate and a lot of great tax content as well. So thank you so much for doing that. Let's cover a lot of big words. So I want to kind of like break it down, like check the box election and subpart F and foreign controlled corporation. Can you break down some of these terms so they don't sound so intimidating to people who are thinking about buying property in Latin America?
Yeah, for sure. So, I mean, the first step is when you're purchasing a property down here, like in Costa Rica, it usually makes sense to have their version of the LLC. There's
Why?
liability. They have liability protection.
Okay.
That's one thing. Although it's not really it's not like the US where everybody sues everybody for no particular reason. But you do want that protection. But more so, in my experience, it's that it's easy to give attorneys in Costa Rica power of attorney to do things for you. Like if you're in the US and your electricity gets shut off and you don't have somebody down there that has a power of attorney to go to the municipality and get it turned back on, you're going to have problems. And it's a lot easier to assign that authority over when you have a company owning it. That's about as technical as I can get with this scenario. But I know it's just more complicated from an individual perspective. So you have the company there, but the problem is when you have an LLC, so in any foreign country, but in Costa Rica in particular, it defaults to a foreign corporation. So everybody, like the rule in the US is if you set up an LLC and it owns a rental property, it's going to default to a flow through. So a disregarded entity or a partnership, depending on the number of owners. And all that really means is the income and losses of the company or of the rental are going to flow through to you personally as if you owned it directly, as opposed to like a corporate setup where corporation pays tax and then you pay tax on the distribution. Nobody does that in the US. You don't set up a C Corp to own a rental property. And you don't want to do the same thing in a foreign country. It's just that the default rule is the opposite. With a foreign LLC, the default rules are based on whether it provides liability protection to all the owners. And LLC by definition does that. So it defaults to a foreign corporation. So that's where the check the box election comes in, or an entity classification election. You want to proactively make an election to treat it as a flow through. So a partnership or a disregarded entity, depending on who owns it. That way, the benefit of that is controlled foreign corporations are messy and complicated. They're going to have, there's ordinary income tax on the rental income, and then it can be the biggest problem I see, other than the complexity of the filings, is later if you want to sell that property, it's not a capital gain, it's ordinary income to you. And there's other nuances, but that's the main problem. So there's very few situations where you want to keep it in a foreign corporation. It can be different in like Europe in some places because the tax rates are high there. So like if you have, there's exceptions to some of the complexities with having the foreign corporate setup. And one of those is if you're paying enough tax in the foreign country, then you're not subject to these anti-deferral rules where you have to pick up the income regardless of whether you take it out. But anyway, I mean, the short answer is keeping it in that flow through structure is very beneficial. So that's like the first main gotcha. From there's a lot we can do. But if you try to make that election later, so you have 75 days to make it, You can technically still do it if you haven't filed your tax return related to that year yet. But after that, if you try to make that election to treat it as a flow through, it's treated as a deemed sale of the property. So when people come to me
So
saying,
you're coming across clients who they've held this property for 5-10 years. It's in this foreign entity type. They never did the check the box election because they were working with their aunt in Minnesota, who's the
right,
local accountant. And
right.
now you're now delivering them the bad news.
Right. Yeah. I mean, that's one of the scenarios. Sometimes I get lucky and people find me when they're in the closing process of selling their houses or purchasing the places down here. But yeah, if it's late like that, we're going to have to deal with the deemed sale rules. So then it's just a question of, you do have the benefit when it's a deemed sale. So if you make the election, it's treated as a deemed sale of the property in the company. And so, by the way, these are just US concepts, right? Like if you set up an SRL in Costa Rica and you make an entity classification election, it's still an SRL in Costa Rica. It doesn't change anything locally for their laws. This is all US tax imagination stuff.
I think that's a really good point, though. Like, yes, the U.S. tax system does not align with these foreign systems. We're back to the round peg and the square hole. I mean, it's
right. It doesn't. This is all U.S. tax return things. In Costa Rica, nothing changes. It's still an SRL owning the company. We make an election for U.S. purposes to treat it as a flow through. But if you do it too late, it's a deemed sale of the property because the IRS looks at it as a liquidation. Just like if you wanted to liquidate a U.S. C corporation, you have to sell the property and liquidate the proceeds. So it's the same concept. What we play with is like, how aggressive can we be with the sales price, the deemed sales price of the property? Like if you purchased it for $300,000 2 years ago, and we want to make an election, we can go back to January 125. Maybe we say it's worth $350,000. So you take a hit on $1,000 gain for the benefit of maybe 5 years from now, it's worth $500,000 and you have a capital gain on that difference. Whereas if you have just kept it like it was and sold it 5 years from now, you would have had a $200,000 $1,000 ordinary gain, taxed like wages, as opposed to $1,000 ordinary gain and $150,000 capital gain. If that makes sense. I know.
Mm-hmm.
But otherwise, I have some clients that, they've owned the property since, 1997 and it just is what it is. They're kind of stuck in that and we just have to manage it that way. But yeah, it's a tax.
Is the planning opportunity hold it till you die at that point then?
Yeah, probably. Or, another option is if you sell the stock in the company and not the property itself. You just have to find some unadvised American or somebody from another country. Because like if you're Canadian or, and you want to, it could be beneficial. It's not necessarily a negative thing for a Canadian that's a resident in Costa Rica to purchase the stock of the company. They don't have the same citizenship-based taxation we do. So it's not a problem for them. But yeah, if you're an American, you could sell the stock and you get the capital gain and you're good. That's usually what I'm trying to just limits you basically can't sell to U.S. people that have tax advisors is what it comes to.
Oh my gosh. I think I have this conversation every single day of my life, but like the handcuffs that we wear as American citizens abroad are just, this is like a great example. It's like, we're going to have to do all this magical accounting that doesn't exist anywhere else. Like, Costa Rica is not asking for this. It's just the US to be compliant for these rules that are not lining up at all. Interesting. So it sounds like Costa Rica does not have high tax rates. It's nothing like Europe. What are roughly the tax rates? What are the considerations if you sell property when you go to sell the property there?
Well, actually, Latin America does have pretty high tax rates in general.
Oh, they do? Okay.
Yeah, Costa Rica. The problem in Latin America in general is there's like the rules and then there's what everybody does, right? And so you have to figure out, it's just a little more, I don't know if lax is the right word, but yes, the tax rates are high, like in corporate. So selling a company or selling a property can be a 25% tax rate. In Costa Rica, there are concessions for like if it's your first property, they have concessions for that. And their rules around like basis and things like that are just different. So you come up with very different calculations sometimes with your US gain and the gain in Costa Rica. But in the US, that's part of the reason, or a big part of the reason why we do the flow through strategy though, honestly, is because you're just going to pay the higher of the two rates in that scenario. So you're going to get a credit in the US for anything you pay in Costa Rica. But I mean, one thing I've found in particular, Costa Rica in particular is more expensive than probably any other Latin American operate. If you want to buy a rental property down here, I mean, I'm not, if you want to buy a rental property down here, don't do it expecting you're doing it to make money on your rental property, because you're not going to. Like, honestly, it's
because the costs are too high and the rents are too low. It's like,
well, there's a lot of competition for rents. There's an Airbnb on every corner, and it's expensive to operate. The costs are expensive. You have VAT filings, so you have to have monthly filings for VAT for the Airbnb operation, or
which is
whatever
like sales tax. If you're wondering what that is, yeah, it's like sales
right.
tax.
Yeah, it's like the monthly sales tax here, and there's annual corporate tax filing. So, I mean, they also allow expenses and things like that against the property. So that's why a lot of times it's not really an income tax issue, just because you're probably not making net profit when you factor in depreciation, things like that. But that's where some of the tax planning comes in too. Is like that's the next step, is looking at real estate professional rules and avoiding some of these like passive loss situations or personal use situations that can limit your ability to use losses. So that's part of what we look at in kind of phase 2. After we have everything set up correctly and you're filing the right forms on time, then we try to figure out, all right, how can we save taxes on what you have going on?
And I'm also curious, like, are there rules, because we were putting these all in these foreign corporate, what are the rules around then actually using this property? Like, if you've worked your whole life to buy this property, now we've put it into this foreign entity and we have all these rules around it. Are you then also limited about like how long you can actually stay at your property every year?
Well, that's a big reason we don't want it in the foreign corporation, because if you start staying in the corporation's house, it's their house. It's not your house. It's the SRL's house. So you have to start compensating yourself and paying yourself rent. And then it just gets way too complicated. And honestly, nobody really does that. They just do it. And so that's another reason you don't want the foreign company, because it makes that complicated. But if it's a disregarded entity or a partnership, you don't have to pay yourself rent, but there are limitations on your ability to take losses if you spend too much time personally in the property. And so you're limited to, it's a very confusing calculation, but it's basically you're limited to 14 days in the property yourself, or 10% of your total rental days. So like if you rent the place out for 300 days a year, you can spend 30 days in it. If you spend more time than that, it just means you can't take more losses than you had income, and the additional losses get parked in this basket to be used later. So like a strategy I use sometimes with people is, let's say, because there's still the passive activity loss rules, which means like if you have any rental property, it's considered passive, and losses get stuck in a passive activity basket, and you can use it for later for income or if you sell the property. But if you fall under these real estate professional rules, which basically means 750 hours or more working related to the rental property, which is easier to hit than you think. The biggest threshold is that you can't spend more time on another job. So if you're a full employee, realistically, there's no way you could justify spending more time on your rental than your full-time job. So it only really works for like retired people, or if one of the spouses maybe isn't working. Then you go the real estate professional route. So this is a little more complicated, but if it's a real estate professional, you can take those. If one of you is a real estate professional, you can take the loss from the rental property and offset it against ordinary income, which is a huge benefit after depreciation deductions and things like that. But if you spend too much time in the property, that 10% or 14-day rule, it still gets locked out. So what we can do is, let's say it gets locked out under that scenario for like 3 years, and you kind of built up these losses. Well, maybe you have a big income year in one particular year. I advise my clients, well, go stay and go rent a property next door to your house. And in that year, make sure we don't hit those personal use days, and you can unlock all of those losses in that year to offset against the bigger income event that you had for that. But that's just an example of like there's limitations you have to work around, but with foresight and timing and things like that, you can use it to your advantage. So there are things you can do. But
compliance is once a year, planning is all year. Yeah. I totally get that. Okay, we're just about at time. So I really, I've learned a lot today. Like I don't know anything about Costa Rica real estate. So I've already learned a lot. But I really want to kind of as a last question for anyone who's listening and considering buying a property abroad, whether that's in Costa Rica or in France or wherever, what's kind of one piece of advice that you would want them to walk away with today?
Yeah, I would say don't assume setting up a non-US company has the same impact as it would setting up a US company. So if you set up a French LLC or an LLC in any other country, don't assume it's going to work the same as a US one because it almost always is not. So, I mean, like always, get advice on the front end, not later. And if you can find somebody that can help you navigate that country as well, not necessarily do it, but put you in touch with the right people so that you're not just mindlessly scrolling on Google for qualified professionals to help you, that's even better. But I would say, like always, good advice on the front end and don't assume things are going to work the way they work in the US because they usually don't.
Because they don't. They absolutely do not. And every country works differently. And and it all comes down to the advice for, like you said, the advice for France is not the advice for Costa Rica, is not the advice for the UK, is not the advice for Mexico. It gets really, really specific. And to just kind of build on your point is for people, oftentimes people are coming and they're spending a significant amount of money on these properties and they'll kind of breeze past the compliance considerations. And I always tell people, like, run a draft return. What would the impact? What is it going to look like? How's it going to be reported? How much is it going to cost every single year? Just so you're aware before you commit this giant pot of money to this dream. Like you really want to think through it all the way.
Yeah, for sure. Visit the place for sure, visit different places in that country to make sure it's the right place for you. Like, for example, I don't own anything in Costa Rica personally. It's mainly because it's such a big country and I just don't feel like I know it well enough to where I know where I would want to be, But I mean, everybody's different. Sometimes you just land somewhere and you're like, this is the spot and I know it, and that's fine too. But anyway, get good advice and don't make assumptions and you're going to be in a lot better position than some of the other people, I think.
Absolutely. Alex, thank you so much for talking to us from the beach. I really appreciate you finding some time. Have a great day.
Yeah, definitely. Thank you.
The content shared in this podcast is intended for informational and entertainment purposes only and should not be considered financial, tax, or legal advice. We encourage you to consult with a qualified financial advisor, tax professional, or other licensed expert before making any decisions based on the topics discussed. Everyone's financial situation is unique, and personalized guidance from a trusted professional is the best way to ensure your choices align with your individual goals and circumstances.